Right. 2018 advanced level cash flow past paper question. So the summarized statement of financial position of both the public listed company as at 31st March 2018 and 31st March 2017 are given below. So they have given that. Okay, and rupees are in thousand. So they have given the additional information. So the requirement here is that to a statement of cash flow for the year ending 31st March 2018 as per LKS 7 statement of cash flows. So they are asking you to use the indirect method to calculate cash flows from operating activities, 10 marks, right? So now let us look into the first additional information. The profit before tax and after tax. The profit before tax and after tax for the year ending 31st March 2018 were rupees 6 million and 4,500,000 respectively. Right. So now let us come to the cash flow statement and record this. Right. So here we need to record the net profit before tax of 6 million. Right. 6 million. So and so you have the net profit before tax here. So here I'm going to do this in rupees in thousands. So that's easy, right? So here I'm going to record 6 million. Right. Then we have to look into the income tax, whether there is any. We need to find out how much of income tax they have paid, right? So if the profit before tax is 6 million and after tax is 4,500,000, then we need to look into how much is the income tax for the year expense, right? So from 6 million, if you deduct 4,500,000, then you will be getting 1,500,000, right? So that 1,500,000 is the income tax expense for the year, right? And also they have given the provision for income tax. Opening balance is 400 and closing balance is 500, right? Opening balance is 400 and the closing balance is 500. So now we need to find out how much cash paid as for the income tax, because in cash flow statement we need to record the cash flows, inflows and outflows. Okay, right. So let me do a working for that for the income tax account. So opening balance, we have balance, opening balance, right? We have 400, right? Then we have closing balance. We have a closing balance of 500. And we know the income tax for the year is 1,500. Now if you need to balance this account, okay, so once you balance, you will be getting 1,900. 1,900. Then once you deduct 500 from 1,900, you will be getting 1,400. So what is that 1,400? That is the income tax paid by cash. Okay, you need to record that in the. So we need to find that. Okay, so cash paid, income tax paid. Income tax paid, how much you have? 1,400,000. Income tax paid. So it's a cash outflow. Need to deduct, right? Then we'll come to the next adjustment. Okay. So here, next one is total interest expense on long-term loan for the year ending 31st March 2018 was 600,000. So total interest expense is 600,000. 600. Right. Then what are they saying? Then the accrued interest in this respect was rupees 400,000 and it has been erroneously added to the long-term loan balance as at 31st March 2018. So there is an accrued interest is in. So if the interest expense is 600 and if 400 is accrued, so we know that 200 only they have paid by cash, right? So you can come here and say interest paid 200. Right, and also there is they have made a mistake in the this one, that is by mistake they have added to the long-term loan, it seems, right? The accrued interest, so 400. So you can see the accrued interest long-term loans here, right? So long-term loans is 10,500. They have by mistakenly added that 400. So once you deduct that, you will be getting a balance as 10,100 here. So opening balance also 10,100, closing balance also 10,100, means they haven't paid any amount to the long-term loans. Okay, so that's what you need to understand here. Right, then moving forward, right, depreciation expenses there for the year ending 31st March 2018 was 1,250 during the year, right? So depreciation, then how much is that? 1,250, right? And also, what else are they saying? You can see that during the year ending 31st March 2018, a new motor vehicle was purchased for cash. So the year ending 31st March 2018, they have purchased a new motor vehicle for cash, it seems. And the land was revalued for the first time, resulting in a surplus. And also there was a revaluation in the land for the first time, which resulted in a surplus. And there were no other additions or disposals of property, plant, and equipment during the year, right? So let's do that, and you need to come to the property, plant, and equipment, and they have given that. So opening balance is 19,000 and the closing balance is 28,000. So you need to do a small working there. Okay, so working property, plant, and equipment. So opening balance you have of 19,000. Okay, have 19,000. Then you have a closing balance of closing balance of 28,000. Okay, right, and you can see there was a land revaluation of 2,000. Okay, there was a land revaluation of 2,000. Was 2,000. Then also there was a depreciation of 250. There was a depreciation of 1,250 depreciation. Then now you need to simply balance this account. So what is this 8,250? The new equipment what they have purchased. So they have purchased a motor vehicle now. So how much is for how much they have purchased by paying in cash by 8,250. So we have found that, okay? Right. So now you need to record that. So you know, if you purchase PP, it will be coming under cash flows from investing activities. So you can record it here. Purchase of motor vehicles, and it is a cash outflow. Motor vehicles. So 8,250. 8,250. 8,250. Right. We have done with that also. Now let us look into the next additional information. The company made a public issue of shares during the year and paid an interim dividend for ordinary shareholders on 1/1/2018. Right. So they have made a issue of shares. So let us come to the stated capital ordinary shares. You can look here. Opening balance 18,000 and closing balance has been increased to 22,800. Means what is the difference, guys? So they have this 4,800 is the issue of shares. Cash proceeds from the issue of shares. How much? 4,800. Right. So now you need to record that. You need to record that 4,800. So that will be coming under cash flows from financing activities. So issue of shares. Cash proceeds from issue of shares. How much is that? That is 4,800. 4,800. Right. And also they are speaking about an interim dividend paid, right? So we need to look into that. And paid an interim dividend for ordinary shareholders on 1/1/2018. Right now here you have retained. You need to look into the retained earnings there. So let me do a small working. Opening balance 2,500 and closing balance 5,200. Okay. And we have net profit after tax. How much? 4,500. Right. 4,500. And right, 4,500 we have there. So let me do it here itself. Right, 4,500. So simply what you need to do. So retain earnings account. Okay, retain earnings account. So you have opening balance of 2,500. Right, 2,500. Then you have a closing balance of 5,200. 5,200. And we know the net profit after tax. How much? After tax is 4,500. We simply balance this account. Okay, simply balance this account. So 2,500 and 4,500. When you get the sum total, you'll be getting 7,000 here. 7,000. Then 7,000. Once you balance this, 7,000 minus 5,200, 1,800. So what is this 1,800? That is what? Interim dividend paid. So we have found that. Okay, so cash 1,800. So now let us record this. Okay, record this. Right. So we have dividend payments that will be coming on the cash flow from financing activities. So it's a cash outflow. Dividend payments. Dividend payments, right? So how much is that? That is 1,800 cash outflow. Right. Then we look whether we have more additional informations. And a long-term loan is payable from 31st March 2020. Right. Okay. So now let us come to the statement of financial positions and look into the inventory. So inventory in the opening balance, we have 8,800 and closing balance has been increased to 9,680. So there is an increase in inventory by how much? 9,680 minus 8,800 means we will be getting 880. So record that. So simply when assets increase, need to reduce here the operating profit before working capital changes, and when assets decrease you need to increase, when asset increase you need to decrease, and when asset decrease you need to increase, and when liability increase you need to increase, and when liability decrease you need to decrease, right? So here what has happened, increase in inventories, increase in inventories, right? So simply when the inventory has been increased means what, why we are decreasing, why we are deducting, what's the logic? Because the inventory has been increased, you have purchased by cash, so if you purchase the cash will decrease, right? So that is the logic why we need to reduce. So 880, okay, 880, okay, fine. Then what is the next, this one? So you can see the trade receivables, opening balance 10,500 and closing balance 9,500. Decrease in trade receivables, that is 1,000. So here you need to show as an increment, right? Then we'll come to the trade payables, right? Trade payables is how much? Trade payables, we have opening balance 8,100, 8,600, closing balance 8,600. So that is 500. That is 500. 500. Then you have cash and cash equivalent, right? So we need to record that as well. So cash and cash equivalent, and here in this sum there is bank overdraft. You must be careful. So cash and cash equivalent opening, we have 2,200, and there is a bank overdraft of 1,400. 1,400, right? So here you can see cash and cash equivalents, right? Wait. Cash and cash equivalents you have. Right. How much opening balance you have? 2,200. You have 2,200. Then you have bank overdraft of 1,400. 1,400. Right. Then cash and cash equivalent. At the end, how much do you have cash and cash equivalent? We can see that 5,020, but you need to deduct the bank overdraft. How much is the bank overdraft? You have 2,600. 2,600, right? So here closing 5,020, 5,020, and here you have bank overdraft of 2,600, right? Now so here from 2,200, once you deduct 1,400, you will be getting 800. Then from 5,020, once you deduct 2,600, you will be getting 2,420. Right. Now let us do this one, balancing part. Right. Net profit before tax 1,000, and we had two adjustments of interest expense and depreciation 1,250. So here cash, sorry, operating profit before working capital changes is how much? You can get that. Once you add 6,000 plus 600 plus 1,200 and 6,000 plus 600 plus 1,250, you'll be getting 7,850, which is going to be the operating profit before working capital changes. And once you deduct 880 and do these things, you will be getting cash generated from operating activities. So how much is that? So here we need to, from 7,850, we need to deduct 880 at 1,000 and also at 500. Then you will be getting 8,470 as a cash generated from operating activities. Then from that, if you deduct the interest paid and income tax paid, you will be getting net cash generated from operating activities. So how much is the uh, net cash flows generated from operating activities? You will be getting from 8,400. Once you deduct 200 and 1,400, you will be getting 6,870. 6,807. Right. That's how you need to do this. Okay. 6,870. Right. Now next amount to right. So we got a net cash generated, net cash flow generated from operating activities is 6,870. Right. Then you have a purchase of motor vehicles, which is an investment activities of 8,250. Then net cash used in net cash used in investing activities is how much? 8,250. Okay. Then you have cash flow from financing activities 4,800 and minus 1,080. So net cash generated from financing activities is how much? So 4,800 minus 1,800, that's going to be 3,000. Okay. Then what you need to do is you need to find out the net increase in whether here there is an increase. So you need to find out the net increase in cash or cash equivalent, right? So 6,817 minus 8,250 plus 3,000 is going to give you 1,620, which is good. There is a cash increment. So net increase in cash or cash equivalent is 1,620. For that, once you add the cash and cash equivalent as at 1/4/2017 800, how much will you be getting? Right? How much will you be getting? 1,620 plus 800, you will be getting 2,420, which is the cash and cash equivalent as at 31st March 2018.